learned to an election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watch list coming in September 29, 2020, and the stock market is going to move big. I mean this in two senses, both in the short term and then shortly after. But today was a very interesting day because we saw a lot of movement. However, people don't really know why. So that means a lot of things are happening beneath the surface. I want to go over all of that, what happened in the market today, everything we saw, everything from uncertainty, how to measure that, as well as what other stuff we saw on Wall Street and what we can expect the rest of this week. So I'm going to explain what I'm looking for. I would even call this a bullish cuckening. We've discussed this. However, I'm expecting some upside, but not to the point where it'll, again, breaking out to higher levels. That will essentially be key. And then the time it takes, and then watching the clock ending September, we have earnings right around the corner. So we have a lot to talk about, but let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/the stock market. You can post the plays, see the plays, watch the watch list come to life, and yes, if you want to talk about long-term investments, tax code, and everything in between, we'll come. Hi, nice to meet you. And the most important thing you need to do, post watch this below. Let us know what you're looking at. Got any plays, comments, remixes, anything, post them below and source that info. Shout out to Chad, baby. But right off the bat, we talked about this a little bit, kind of what I'm expecting, essentially, for it to play out with what we saw in the beginning of the year. We've talked about this again, the year end and year beginning. So we're seeing this formulate. These levels are going to be important. But now the main thing I want to talk about, which everybody's been talking about, the election and the uncertainty related to that. So today was very interesting for many levels. Again, you saw even this relatively large bounce out of nowhere. Even the dollar move, the key I would say where you start to see things moving beneath the surface. You didn't even see bonds move at all today. So there's that, as well as some individual names made some crazy moves here, and Boeing did hold up most of the Dow Jones today, but this was a fairly large move. So now you could see this brings us back to these levels around when we started reaching that next leg down here, where it kind of broke out of that first cuckening of September. Again, bonds didn't move. That's why we've been looking at TLT. Then all of a sudden, the dollar, again, that's when the dollar started breaking out a little bit, but you even see the dollars back to there. So putting this all into context so you could understand this a little bit better, because what's happening is election uncertainty is rising, but now market is kind of adjusting a little bit differently, and it's even back to what we saw a few days ago, where we're still at this point of where we broke down lower. The market's still pricing it at the exact same price across the more broader important classes. So it's like the market is waiting for more info, but now that uncertainty is felt. For those, we talked about this, how it's measured. If you guys are ever curious about this, and you could probably see, you've probably even seen some of our other trades. Again, I talked about this in the past for inflation, but this is now, even with the election, it is when the spreads widened on some of these contracts, especially the ones dated later October coming into November around the election. So it is mainly with futures. However, you will start to see that cross over into any of the future pricing assets like options. So, and then even to the pricing of stocks themselves. But that's how you measure election uncertainty. So essentially, all of the spreads are widening. So despite us being at these levels, again, you did see some premium crush on shorter dated contracts, but all the contracts around election, they're not really losing value, but the spreads are widening. So it's very interesting. So that's why too, if things start to bubble over, it looks like the market's just waiting for something, and I wouldn't be surprised to see, again, a little bit more of a continuation of what we saw today. It may hold up a little bit, and then it could cause another move, but then I think after that, it will be followed up with a massive move up or even down. The direction will definitely be dictated by policy and a bunch of other stuff that the market is waiting for. So that is what we saw today. That's why today kind of really stuck out in a very, very weird way. However, now, at the same time, there was a lot of upgrades today on Wall Street across the board, just all different types of industries. Even space went crazy, Virgin Galactica. But there's also earnings right around the corner as well, too. So we are going to see even tomorrow. We made an earnings play. I would keep your guys' eyes out for them. But Micron, we're going to get them tomorrow. They're going to be the chip makers. We'll see if any Grim Reaper does hit or can surprise. Again, I talked about that the other day, but now you saw the opposite last week with Nike, which was very good. Retail stocks started pricing in very, very positive after Nike's report. So Micron could have an effect again if there is either a blowout quarter that's positive or it's just really, really bad and they miss. So watch out for that. We're going to look out for that this week. Again, finally, for the rest of the week, the jobs report will be important, but it looks like anything from the Fed as well, too. Today was we saw relatively nothing all day today. Again, it was just mainly the gap up. There was little movement at some of the Fed comments, but it was really, really hard to say, or it was just really minor to begin with. So it was interesting, but anytime the Fed speaks, that could move the market. I will watch for any comments on that this week, or in general, the market is eyeing the word inflation. Again, when I'm even watching some of these broader asset classes, that is going to start getting a little bit more important here, and that relates now depending on the source, and that is either going to be policy or person. So that could even be policy, stimulus, how that could affect deflation or cause the reverse, anything of that nature, or again, depending on the person, if it's someone in the Fed or a lot of Fed members or even anybody in politics, if they start bringing up policy or stuff that could affect inflation, the market may respond. Again, there is still a lot of other factors we have to see. We saw that Brexit stuff. You saw the currencies a little bit today, so even oil, and we'll keep an eye out for that. But there is a lot going on. This was a very, again, highlight day because of all of the moves that we saw, but the lack of movement at the same time. Again, just where we are coming when it's getting into the end of this month and what is about to happen here with the election. So that is pretty much it. So let us get into the plays. So right off the bat, I have a few different plays. I'll go over the call buying. That was pretty simple. Again, earnings is right around the corner. We will watch out for that, but I have some of those plays I made a few weeks ago. Again, premium and uncertainty is going to be a little bit interesting. But as far as today, I'm going after a company that already reported, FedEx. So I made these calls in the morning. I think they ended up getting clapped, but I grabbed 10 of the November 20th 350 calls at 60 cents a pop. I just wanted to play FedEx for the earnings continuation. Again, we talked about it yesterday, and then they gapped up even more. Again, there was that UPS upgrade, so I like that. I figured they could keep going, but popped up and was a little bit dampered. So we'll see how these contracts age and how they get premium depending on the stock. But that was the first play I made, and then we did do a Micron earnings play. I got next week 43.50s. I grabbed 5 at 36 cents. It was like 150 or like 180, I think, or something around there. Kept it a little bit smaller than some of the other plays we've been doing, but why I like Micron is because they haven't moved as much. We talked about this. They have earnings. They're going to be happening early. They don't move too much on their earnings. I mean, interesting enough, their last time they did move, they were at the exact same price, but that even tells you something. A lot of the chip makers for earnings, most of them are outpacing for 2020. They're doing a lot better. There's a few that are lagging behind. Micron's one of them. So some people think they're lagging behind and could catch up, or they could drop. I just went on the put side, but I think both cases works. I think Micron may be one that surprises, but it also may not be one. So we will see, and that's the idea. I want my hand in the cookie jar. But those were the first two plays, buying options. But now we're going to also talk about the credit spreads. I am going to be watching these two plays, and everything else this week will be a mix of all the stocks we've been looking at. Again, keeping our eye on the news, but I've really been going after this credit spread strategy just because, again, even if I'm expecting a bullish cuck, I think we might kind of bounce up, but then range out for a little bit. And even if we do continue to go higher, it will be at a slower pace than the first couple of moves, which would benefit premium selling. So come on the live stream if you guys don't know how to do this. We are going over this a lot. We have a lot of tutorials. Take your time with it. Paper trade, paper trade, paper trade. Please don't stress. But as you see, we're doing everything. Again, for different reasons, I want to use different strategies. So even like Micron, why am I buying the options instead of selling the spread? Because when you buy the options, there is no maximum gain on that play. So if there was a big surprise and I'm expecting a big surprise and then the market moves and then the stock moves because of earnings, I would rather buy the option, a call or a put in that case, rather than sell the option, because in this case, I do believe it's going to move a big amount. So if I expected it's going to move or stay within a range, then I would sell premium. Or if I pretty much don't think any big move is going to happen and stock prices might stay the same, that's where selling premium is going to benefit you. So I did these two plays. We did similar ones last week. You will notice a similar name with Nike. And before I show you guys on the Robinhood, I wanted to write it down even as just like writing of how the play would look. Maybe this would be a little bit easier to understand so you could get the idea. Again, none of this is a recommendation. Do not trade these. Credit spreads are a little bit more advanced. But the idea is when you are shorting them and selling a credit spread and receiving credit, you want these options to expire worthless. So the ones you go negative on, you pretty much are saying the stock price isn't going to close there by expiration. You think these contracts are going to expire worthless. The net credit is how much you receive. But this was the first play. I grabbed a October 9th and next week. So we did next week contracts instead of weeklies like we were doing last week. It's still a weekly, but a little bit more time. Went negative 10, 120 puts. And again, negative 10 is a lot. You shouldn't be doing this big of an amount unless you have the balance or experience level. Again, it's kind of like if I say like don't do more than one and you have to ask why, you probably shouldn't do more than one. Just be careful is what I'm trying to say here. So negative 10, 120 puts. Then we did positive 10. We bought the 116 puts as insurance, and so it doesn't require as much collateral. And then we got a net credit of 61 cents a contract. So on 10 contracts, I got about $610. So this is how it looks on the Robinhood. You could see 120, 116. We sold the 120s, bought the 116, average credit 61 cents. So I got $610. Again, it says I'm not up as much because the spreads widened, but I think we were up for pretty much most of the day. We got about like 20% on this play. It wasn't too bad. Again, it didn't depreciate as fast as last week in the weeklies. But the idea is by next week, if Nike keeps going up or stays the same price, this premium will devalue and we should be able to make a profit. What I look to do is around 50% profit. 50 to 75% is when I'll take profit. Or even if it's lower and the market's kind of gets a little bit more shaky or gets too dangerously close, I wouldn't be afraid to cut it out. But it is a max defined risk. So in this case, I think the max risk is like $4,000 or $5,000. So again, watch the premium spread videos. That was the first one I did. And then the second one, this should be a little bit easier after that first example, but BA call credit spread. So the difference is instead of selling a put, when we did a put credit spread, you want the stock to go up because you want the put to expire worthless. That means the stock stayed the same price or it went up. That's why a put would hold no value. In the reverse case now, a call credit spread, you are saying that you think the calls will expire worthless. So you want the stock to stay the same price or go down. So in this case, I did it on Boeing, and Boeing's premium is usually high. That's why I kind of like it. And it's been on this crazy streak the last few days. So I sold a call credit spread again next week, October 9th, did -5 to give myself wiggle room so I could average in or out of this, and it required a lot more collateral because the spread is wider. Your max risk on credit spreads is the difference between these two strikes, the ones you shorted and the one you bought as insurance. So this is a $4 difference. This is a $10 difference. This one is going to require a lot more collateral, makes your back end risk a lot higher. So I did -5, 180 calls, and then bought 5 of the 190 calls, net credit 95 cents. So I got about $500. Again, we go back, it looks exactly the same as other one, credit spread. This time we did 5, down $100 on it because right when I shorted it, it just kept going up and holding. I'm documenting these. You guys can see how they play out over the next few days and just watch how they value. These ones have a little more time than the ones last week, so it's going to trade a little differently, but very similar at the same time because it's not as if I added too much time. But 95 cents collected, $4.75 in credit. It says -585 because now I shorted them and only got 95 cents per contract or per spread, 180, 190. But now if you wanted to do that same spread, you would get more money. It's worth more money now. So now I only collected $4.75. If I wanted to close my obligation and not face the max risk, I would close it out, but then I would have to spend $5.85 and I would take that loss. But you shorted it. That's why it says -585 value, but your total return is just total return. If it's negative, that means you lost. If it's positive, that means you made money. So even in the Nike case, you see positive total $20 return, 3%. Market value is -590. Even though it says negative market value, that's because I got 610 on the credit. So, nice little credit spread lesson. Those are the plays we did. I plan on doing a lot more this week, or even writing those out if both of those just work out in my favor and I don't really touch them. I can make like $500-600 if I cut them both out at 50%, or I could make $1,000 if I just let them both expire worthless. So, I'm going to be watching those, watching the earnings plays, even continuations. Keep your eye on Micron again. Netflix I brought up, and really all of the FANG stocks, even just watch Apple and Microsoft. Just notice which ones kind of bounced a little bit higher here and had kind of more of an uptick in their trend. You could see which ones were stronger and not. I think on the 100-day, you could see it a little bit better there. You can see Netflix is a little bit weaker there, but I like them. A lot of people are talking, again, I said there's just been a lot of back and forth drama. I just don't. I think that could just be fueling some of the premiums, maybe, or even killed the premiums because people got a little bit hyped earlier. But Netflix has been catching my eye lately. We'll see. But watch them again, just in general with everything. Watch the laggers and leaders between the FANG. Again, Boeing, we did that call credit spread. I think it could move up again. I think I sold the 180, so I think it's pretty much just going to get capped again in a range. We'll see. But I plan on even using that play to, average in or out of. But watch Boeing, watch Nike. They kept going. Remember we had that call. Was it Nike? I think it was, it was Nike. They sold off really bad at the end of the day. I think even, I guess that's why those puts ended up going up. I guess it was the spread too. But no, they were killing it throughout the day. Very, very interesting move. But watch them, watch FedEx. We did add 100 shares of Walgreens to the long-term portfolio. So we had a nice discussion over this today. We explained the whole logic behind this and how we're going to be even not really switching up the long-term strategy. Obviously, we're going to keep that the same, but directing more of our funds towards value now at this marketplace versus growth. So that's why we went towards Walgreens. Again, I got some more shares of that a few weeks ago, but we added this to the bigger long-term. We got another deposit coming away. We just talked long-term philosophy, so that was the other play I made today. And then finally, we also are going to be watching just Draftkings. I talked about this. Again, I think this might even be good for options. I expected it to go up or get some steam, but it's getting a lot of steam here. This could it might turn into one of those hype stocks again. This trend is just, it's definitely sticking out, and now it's looking ridiculous again, even up almost 50% from when we added it to the long 2 weeks ago. So watch them, Microsoft. And finally, the dollar is key. You could kind of even see it with the market. With dollar did make a bigger move down today a little bit, but you saw how the market's reacting. Bonds, I would watch, because when this does move, that is really going to be our signal. Again, TLT is going to snitch because clearly it's not moving right now. So keep your eye on that. Stay focused, stay sharp, but that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to rebuke all the scars in your life. And don't be a scar, baby. Come on, think about Simba. But the code loves you. I love you. I'm going to see you in the morning. Let's go.